Very good morning, everyone. Welcome to Admiral Markets. My name is Chris, and together we're going to take a look at this live webinar on Forex market and using technical analysis, in this case, trend lines, to look for interesting setups, interesting bounce or break spots, etc. And maybe trend lines, filters. We'll discuss all the details about how to use trend lines for trading and analysis purposes. But first of all, though, we have this disclaimer to discuss. This webinar is intended for a global audience and may not be suitable for everyone. Please seek advice. Please look at this link, admiralmarketsglobal.com, to check if it is suitable for you and other conditions and details. Select your country of residence and then contact an appropriate entity. All right. And then also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. So the 5-step module that I use, trends. First of all, point 2, look for opportunities. Point 3, check if there are any filters. Point 4, what is the area of interest? What is the trigger that makes me want to trade that particular pair, that particular time frame, or is there none at all? And then, if the trigger has been met, how to enter. Could be immediately, but maybe there could be a next step, like a pullback or a continuation break. So today's focus will be on trend lines, as I already said, but as usual, I do use fibs and moving averages and awesome oscillator typically in my analysis, so we will be using those as well, but the emphasis, I'll try to put as much as possible on trend lines. All right. First of all, last week Friday, we had NFP, non-farm payroll, as you are probably aware, and it was bullish for the USD because there was a good NFP figure, a lot higher than expected, and we saw indeed the pound dollar fall, the euro dollar fall, dollar yen rise. Yesterday, all those gains were kind of wiped away as the dollar weakened again. So what about today? That's, I think, going to be interesting what the dollar is going to do in the long term and this week. Let's talk about that in a second. But first of all, today's news, nothing red tagged. Tomorrow, that's only tomorrow morning. Okay. So nothing major, I think, today. As you can see, not red tagged at least, and I don't think anything major this entire week. There will be some red tagged, but somehow it doesn't work for me. Okay, well, anyhow, let's move on. I don't want to hold this up. We can look ourselves what has happened or what will happen this week. Today we see nothing major. Let's scoot over here to the charts and take a look, first of all, at the euro dollar. Alrighty, here you can see a couple of trend lines and a couple of fibs. Basically, these two trend lines indicating support and resistance, both of them green. The top one, of course, resistance, and the lower one, support. Now, in this case, the euro dollar has had a strong fall and it bounced off the 61.8 fib last week. That's something that I remember talking about, that could be a bounce potential, and we saw the continuation of that to the upside last week. It was a trade actually that we were talking about for myself in this trading room last week. That worked out pretty well, depending on how you managed it. It actually went all the way up to 113.75. So that definitely rallied up for a good 500 pips. That was even more than anticipated or hoped for. Then we did get a bit of a retracement. Friday was that NFP, and that caused part of it. But what we saw in the lower time frame here is that we got another bounce at the 61.8. This fib is something I had on the chart, and I said, there could be two things. We can either break here or retrace probably to a lower fib, and we could see a bounce, which happened indeed. So the NFP pushed it to the 61.8, but we got to turn around yet again. So for the moment, though, these trend lines are the key levels, because these bounces are great. These bounces are great. This breakout was great. The upside trades, but for the moment now, price is very near a resistance spot. And from that point of view, I would now want to go long right in front of that resistance line. In this case, the trend line can be used as a filter. The trend line is basically indicating, look out, this is a spot, an area, a zone where price, if it reaches, has kind of used for downside in the past. So there is that potential for that pattern to continue, and therefore caution is merited, right? Whereas these were areas where price used as a support and rallied. This particular area does not have the same psychology, does not have the same position, does not have the same space or expectation. So from that point of view, this is not an area where I would go long. It is potentially an area where a short could be merited because it's at resistance. But in that regard, I would need some more price action confirmation, because first of all, we see that yesterday was a very bullish day and broke yesterday's high already, which means, if anything, we're in a bullish environment. Second of all, we got bullish 4-hour candles. So from my point of view, I don't think that bullish candles in a 4-hour chart are necessarily always saying that a short is not possible. But considering the fact that the daily here has made a rally and a retracement is rallying again, I think the overall momentum on the euro dollar is looking more bullish at this moment on the daily. The weekly obviously is still bearish. I'll talk about that in a second. From a daily and a 4-hour point of view, the momentum and trend is up. So I personally rather trade a break here for the moment, unless I see a good 4-hour reversal candle. As I said, I don't necessarily need a reversal candle to trade a bounce necessarily, but considering the 4-hour and daily upside, I think a breakout to the upside is not unimaginable. All right, let me open the Q&A box, by the way. Do you hear me fine? I see some questions. Oh, you can't see my pointer. Thanks, Edith. Okay, I don't know, sure what you missed in the meantime. Ouch, but not sure how long it was paused. But apologies for that. But I was showing basically these two trend lines. This one as a resistance and this one as support. And I was talking about the fact that right here, because of the upside on the 4-hour daily, I would want to see a price action at minimum. Maybe not even, personally, I don't know, it's tradable if a good 4-hour candle is there, but I personally like the breakout more than the bounce. But the reason why I want at minimum a candlestick pattern is because of the upside momentum that we have here. But in general, a bounce does not have to be traded always after a 4-hour candle. All right. Let's see. Where do you have the trend line left point there? Yes, the trend line left point is here. It is a bit curve fitted in a way to make the trend line have three hits. This spot is not typically a spot that I use, but okay, if you want to use more of a clearer top perhaps, then this is one. It is a fractal. This is more an important level, so one could also draw it like that. It will be about the same level. You cut through a bit of candle here. I think that's okay. It's only about half the candle. It's one candle. I'm okay with having a trend line that is drawn through such a small piece of price action. Preferably, of course, we have neat trend lines that only have candle highs or lows or through wicks. This is cutting through a bit of a candle, but still within a decent margin, I think. Obviously, a trend line like this, I mean, it is used sometimes, but I think a trend line like this, for instance, cutting through all these candles does not have much merit. I mean, there are traders who still use it. Just like this is a broken trend line, so it could be used, and that makes still sense, of course, for the opposite. But I meant is more like, let me give you a better example. Something like this or something like that. This, too many candles above here, I would not consider this resistance anymore. This, for instance, could be considered resistance and here support, right? The broken becomes support, but when you cut through too many candles, I don't consider it resistance anymore. This is not a resistance trend line because too many candles are above it, but this is still okay. Anyhow, those are some details about trend lines. So from that point of view, how would a break look like? A break would have to either see a bit of a pullback and then a push through. And here, a good 4-hour candle would have to really post a close above that trend line. A bearish candle, I would like to see engulfing twins at the least. Target, in my opinion, could be a simple level like this because it could stay within this bottom here. It might not break that bottom. And if it does fall, it could just do something like this and make a wedge. So I think the profit potential to the downside is very limited. Hence, I also don't like the downside trade all too much. Engulfing twins is when a 4-hour any candle breaks the high and low. So for instance, this here is bearish engulfing because the second candle, the bearish candle, is engulfing the candle before it, the bullish candle before it. Bullish engulfing candles would be the opposite. You would have a small bearish candle and the bullish candle would be totally engulfing the smaller bearish candle. So kind of stuck in the middle, and kind of stuck here in that regard, with not much space to the upside, not much space to the downside before you get a bounce or break. So I probably rather even wait for longs here, or a very small short here. That's really it, I think. Regarding the trade management, you can see if I would have followed my own rule about using strong power bars, I would have been catching a lot more profit, and the trail would have been somewhere in here. Instead of exiting somewhere here, it would have been about twice as much profit. About the trade, just a comment about last week's trade still. And that's it. Now, regarding, I see some questions, but let me just still quickly talk about higher time frames. Oh. This is a corrective zone. I think we talked about it already. After a very impulsive fall, if you look at the impulse, almost each candle is breaking a lower low, is posting a lower low with lower highs, with the exception of a few candles. And then the continuation of the downside is within 5 to 6 candles. So this is all one movement down. no stop. Now, finally, we've had a stop. So from that point of view, when we put a fib on what I consider wave 3, the most impulsive part, there's a chance that price can get up to the 38.2 or 50 fib, which could be the retracement level that is sending this euro dollar back to the downside. So this correction can last up to those levels and then follow through. So I'm expecting more downside on the euro dollar. I would say 90% chance that the euro dollar will break this year's low of 105.50 and head towards parity. Parity was my target at the beginning of this year. And I think that should be obtainable when looking at, for instance, the momentum that we've had here. Now you can see the oscillator heading back to the zero line. I'm not sure if we'll get entirely to the zero line, to be honest, because this could be a wave 4, so it doesn't have to. And it could start turning like this already earlier. But considering the speed and the power here, I would expect a bottom break sometime this year of 104.50 to head towards parity or lower. The catalyst for that could be obviously an interest rate hike in the US or euro problems, like Greece, for instance. We'll have to see how that solves itself. Greece in its entirety could be a bit of an unknown kind of factor, but those things could aid the downside. From a technical point of view, though, very strong downside and expecting follow through. But for the moment, though, you can see price is still in that retracement mode. How long could that last? If we look at the monthly chart, I think personally, we've had 2 months not breaking the bottom. Right? This is every monthly candle had a higher high and higher low. Sorry, a lower low and lower high, excuse me. Except this candle here, didn't have a lower high, a lower low. Now we had 2 months. So I'm expecting this downtrend to continue within 5 to 6 candles. That means within 5 to 6 months. Otherwise, this downside momentum is over. That means, in my opinion, that what is the 5th to 6th candle? Well, March here is the last candle that posted a lower low. So April is 1st, May is 2nd, June, this is the 3rd month, July is the 4th. So that means August is the 5th. So by August or September, the very max October, depending on September, the break of the low should happen. Otherwise, I have serious, the chances of this downtrend continuing are lower, substantially lower. So I wouldn't be surprised personally to see June being an upside month, maybe July kind of hitting the 38.2 fib, and then somewhere in August, September, October, November perhaps making that downside. Something like that, roughly speaking, is my expectations, kind of the vision, the path of least resistance that I'm expecting on this euro dollar. All right, so that's a quick note on the higher time frames. So from that point of view, I wouldn't be surprised to see a move up to the 38.2 fib. We're not all too far away, actually. This could still go with some ups and downs before we hit it, maybe even the 50 fib. As I said, we're not too far from that 38.2 fib anyhow. And if we put a fib back on this swing high, swing low, you can see the target is equal to the 38.2 fib, the minus 272 target, and the minus 61.8 equal to the 50. So something perhaps like this. Something like that. All right. So that's the higher time frames. Now let's take a look at the pound and dollar yen and any others that you potentially might have. But first of all, let me look at some of the questions. Okay. Bear with me if you didn't ask one. Maybe you'll find it interesting too. If a 4-hour candle is bullish, but it's a small candle, would you consider it a bullish sign? It really depends. Both yes and no. First of all, if it's a small candle, but it's a small candle within a sequence of bullish candles, then it's okay. If If it's a small candle, but there are all small candles around it, then it's probably not so significant. And it's probably not a bullish sign. It's more a sign of hesitation. But if prior to it are decent bullish sized candles, then it's probably a continuation. If around it are just smaller candles or more bigger bearish candles, then it's not so important. Does the euro dollar look like a bear flag? Yeah, it does. Definitely when you look at the weekly or even the daily, it does. Good observation. I didn't have this channel on, but this is a good channel. And it's good for this trendline webinar. Trend lines can be very useful for trend channels too. This is a very shallow trend channel and therefore looks more like a bear flag. Although because it's a daily channel, this bear flag channel could last long and be used for quite some time before it's broken, even though it looks like a bear flag, because just of the time frame. So good observation. Trend channels typically, when used in trends, have a higher degree kind of angleness or angle. Typically more a let's say 20-ish to 40-ish angle like this, and that's more sustainable trend. If it's too steep, then it's more of a momentum, and this is not sustainable, and eventually we'll get a correction so that you get more of a sustainable trend, something like that. The blue is the channel, the trend channel, and the green is kind of the acceleration within that channel. So good addition there, Wei. And it's an ABC zigzag. It is. However, it didn't stop, in my opinion, at a very important fib. So, in my opinion, therefore, there is a decent chance that this could be an ABC that is a W, and this is an X, and we're going up for a Y of 4. So this is only part of the correction. That's the main scenario I'm looking at. The alternative could be indeed that this is a wave 1, 2. In that case, though, this does not look like a 5-wave structure to me. This looks more like an ABC down, which means that the downside looks more corrective. The upside looks more impulsive. Therefore, I'm not considering this to be a wave 1, 2 so likely at the moment. You never know 100%, but I wouldn't say the most likely scenario at the moment. I don't have pivot points on. Let me quickly add it. How high is the chance? Difficult to say. We got engulfing 1-hour twins now. If this is a 5-wave structure to finish wave 1 of 5, sorry for the wave analysis, but that helps me with probabilities, then this could be a pretty deep retracement, which means that if we put a fib from here to here, it could go deep. I think that's it's difficult to attach a percentage, but I'd say at least a 50% chance. I wouldn't say anything lower than that necessarily. There are, in this case, a wave 2. In fact, if it is a wave 2, probably even higher, because typically wave 2s are known to have deeper retracements. So from that point of view, maybe even higher, maybe even 60 or 70. But yeah, the question is it a wave 2? It is a bit. This particular count is possible, but I would say it's how do you say it? It has its difficulties in the sense that there could be many explanations at the moment for this particular structure. And although this is a clear ABC, this looks more impulsive. What can explain this part right here? It could be a triangle. That could be difficult. It could be wave 4, 2. Still, in any case, whatever the wave structure is here, it could stay within these zones. And important are these lines. And hence, if you look at these trend lines, a deep retracement is possible back to these levels just to retest the trend line here. Alrighty. If you're interested in a short, there are a few things you can look for. It's taking a short right now with the stop loss just above here, anticipating a bounce, just like that. If a trader waits for a candlestick confirmation, a break of that candle low, or a retracement of the candle are options as well. So in that regard, this is a 4-hour, let's say this is a 4-hour engulfing twin, then a fib on that candle could be used, and the retracement up to, let's say, halfway could be that short. All right. Or if 1-hour chart perhaps, right? We see already engulfing twins. So what could be the entry? Right here, in fact, or a retracement to test a bit higher, maybe 113.20. Another way could be to wait for this oscillator to hit the third red bar, which will be soon. That could be another signal that this particular momentum is over. Another way could be to use the Camarilla. I know there are a lot, just summing up all the things that I can see as potential ways to tackle an entry, that's all. To let this hit the L3, let it bounce, and then wait for the break below that. Alrighty. Other time frame, well, when looking at the 1 hour, for instance, we do see the engulfing twin, so that does give already more indication. Perhaps it's an early signal, but let's see. 4 hour has more substance. That's what I mean. Gain lines, definitely. I mean, there's definitely traders out there that use gain lines. I personally just use trend lines. Let's see, a few more questions and then we should be, and we'll continue with the pound dollar. Does a trend of small candles go longer than one with bigger candle? I think if the big candle occurs after kind of at least let's say two candles, smaller candles, 2, 3 smaller candles, it's typically a candle that will get followed through. Actually, it's a good candle. If it's out of the blue, all of a sudden a big candle without any small candles before it, then it could be kind of a reversal, kind of like this volatility spike, and you see the opposite. Now, this is just a general rule, obviously, and it's not something that always occurs. But just to give you an example that I see now in the chart, look at this. All of a sudden, this is a pretty big candle. Didn't have small candles before it, but down, right? Kind of that volatility exhaustion almost here. Although there was an upside before that actually. But typically candles that are out of the blue sometimes can have the opposite. But if you have a small few candles, it's kind of adds a bit of trustworthiness. If it could go longer, not necessarily, because if you have a few small ones and you have then one big one, then typically you'll get follow through actually. You need divergence on a lower time frame. Yeah, we have actually a live webinar on waves at the beginning of the month. Next one is beginning of July. But we can try to have one on waves on Thursday as well. I'll try to organize that. Trend lines, you could use, try trend lines will actually, the break already occurred if we use trend lines like this. Like that, connecting the bottoms. And you can see the break right here already. So from that point of view, it's already a kind of counter trend line break after a bounce at this spot. Yeah, good observation. So from that point of view, it seems to be breaking pretty decently. From that point of view, a 5-minute chart perhaps is even warranted now. And as one way I like to trade an impulse on the euro dollar typically is not trade the very first impulse, because on the pound or euro, typically because of the fact that it has it can encounter kind of these false directional moves where it kind of makes a head fake. First, let's say it first does a small move down and then continues with the trend up. That's why I'm not a big fan of trading it immediately. But if it does show a good momentum without the head fake, and it seems to be doing that at the moment, then what I like to do, we've talked about this more often, is let this 5-minute go back to the zero line on the escalator and then take the next momentum, which is statistically, I think, a lot more reliable than the very first one. And at the moment, if this does continue like it's behaving now, then at least part of today will probably have a bit of a mini intraday downtrend. I wouldn't expect a big intraday downtrend, as this could still be only a retracement of the bullish candle that we see yesterday. So if it tests the 78.6 or the 61.8, those could still be bouncing spots. Let's take a look where those levels are in relationship with the Camarilla and L4s together with the 61.8. So something like this, perhaps, maybe a zigzag like that. The L5 is a bit lower, but we see maybe difficult to reach because we do see some fibs above it. We see a confluence of 78.6 in the trend line and this bottom more or less. All right, pound dollar. All right, pound kind of making the same structure. It too dominated by trend lines. Now trend lines we can use for, as I already said, trend channels. We can use it for bear flags, chart patterns basically. The difference, of course, once again, the angle. This is a channel, trend channel. Well, let me do it this way. Green is trend channel. A channel can have basically any angle. A shallow angle is a bear flag or a bull flag, right? So you can use it for trend definition basically for patterns, chart patterns like a flag, or just loose trend lines that can be used as support and resistance levels. Those loose trend lines then can be used for break or bounce spots. Pound dollar, two major lines are important as support and resistance, indicating perhaps some type of triangle or at least clear support and resistance lines, with a resistance line connecting now 4 spots and a support line connecting 3 or 4 spots. So this is an important line. A break above, we get the bullish break, and break below, obviously we get the bearish break. Bearish break target is 150 in my opinion. Bullish break 155 at the first one, but it could accelerate to 157.50 after that. The difference between the top and the bottom here is about 150 pips. From a wave perspective, I was thinking that this could be wave 3, but that seems to be a bit premature at the moment, considering the downside, so that's probably not so likely anymore. So from that point of view, it could retest the bottom again, but the space is getting a bit tighter compared to previously. Yesterday was a good bounce. We had kind of an ABC zigzag here, down to the 8886 fib. Right, we had upside continuation. We talked about it last week here. The break and the pullback, we talked about it. That was good. I think we had some good trades, in my humble opinion, last week. Talked about this fib up to the target. Now we move deeper to the 886 fib. So this kind of minus 618 target is still open from basically the original fib almost, in a way, to a certain degree if you look at the 4-hour chart. If you fib from top to bottom on the 4-hour chart, you can see that we went down to the 61.8, hit the target, went down to the 86, and that target is still open. This is a shark pattern, a fib shark pattern, in a way where you have that could happen. But for that to happen, we do need this trendline break. So when that trendline breaks happens, this space is there. For those that were brave enough to take longs at that 886 fib, it is a great reward to risk trade because of the fact that the risk was only about 30 pips, but the reward was about 180 so far, but could be more. That was a very risky trade, difficult trade, but had a lot of potential because of the bottom so close by. It was risky because of NFP, obviously, and was making momentum to the downside. In retrospect, we can see it was an ABC, bounced, made a hook back, and continued. That hook back, I was looking for to finish in London, which it didn't. It actually finished before London and was after London closed was already here, which therefore ruined my plan personally. But I was looking for a hook back here. I was thinking about buying there at support because we got the bounce at the 886 fib. This could be the hook back. We had 1, 2, 3, 4, 5 candles not breaking it. Typically that means the bottom, the momentum down is over. So that was my thought. It just, my plan was not set up that I could catch it, unfortunately. But anyhow, that was the idea. Now we made that up move and we're not breaking through resistance. So for the moment, a 4-hour candle close above 153.60 could be a trigger for a long with a stop loss, perhaps even a tight stop loss below the candle low or below this bottom, targeting the 155. This downside break I won't even discuss. I think that's too far anyhow. The downside back to the bottom of the pattern, let's see, would have to be the same kind of as the pound dollar. I would have to see, as the euro dollar. I would have to see this turn, the AO turn, make a bear flag and break again. That's the only way I would take it at the moment. If you did take the counter trend line, then it would have to have been something like this or so. There was not really a great trend line here. And you can see sometimes very risky, because if you take the break here, it still pushes up and breaks this top. So if it's a steep counter trend line, steep trend lines can sometimes have that unreliability about it, in the sense that the break could happen too soon. That is why sometimes waiting for fractals to break besides the counter trend line helps, because when this fractal breaks, for instance, there's a bit more confirmation. This is the same kind of entry that could have been possible in the euro dollar, but it's happened a bit earlier. Personally, though, as you know, I am a bigger fan of getting a bear flag here and waiting for the breakdown. Let's see, Cable broke the upper trend line when switching to the 50-minute chart, but is retracing down now. I'm not 100% sure which break you're talking about. Are you talking about this trend line break? Or do you mean this trend line break? Maybe. Do you mean this one here? That is an equally, the very top one. This trend line I don't consider broken yet, because of the fact that when connecting on the 4-hour chart, when connecting the tops, price is still below it. Even if we zoom to the 50-minute chart and maybe a small piece is above it, or depending on how you draw it, I guess it could be more, maybe like this. I don't consider that a full-fledged break. Yeah, even on the 50-minute chart, I don't see much of a break. Perhaps only, a very small part of the price action that I would not consider a break, personally. So it still has to be broken. A break, in my opinion, is where a full-size candle with a decent-sized candle is fully, or at least more than 60% above a trend line. So when looking at the 4-hour chart, because first of all we need to identify which chart this trend line is based on. I would say this trend line is a 4-hour trend line, because of the fact that we can clearly see that this is the 4-hour candle. So first we need to find out what time frame is the candle. What time frame is the trend line drawn? So that's the 4-hour chart, because we can see the entire trend line on the 4-hour chart. Once we know which trend line the time frame is, then we can say, okay, we need a 4-hour candle to be above here. At the very, no, that's the more conservative answer, or one time frame lower, which is the more aggressive answer. I would not go to 2, 3, 4, or 5 time frames lower, because here we have a candle outside, like the 50-minute chart, but the time frame is so small compared to the 4-hour chart. So if we have a trend line on the daily chart, I wouldn't use the hourly anymore, personally, because it's too far from the daily. But I would be either using, if it's a dayline trend line, I would be either using the daily chart, conservative, or if more aggressive, then the 4-hour. And then with the more aggressive approach, a tight trail stop loss below the candle lows could be a good way to avoid getting the situation where you have a trend line, price breaks through the trend line, and it's a false break, and boom, you get this. The reason that this happens, the thing is that when you trade, let's say you have a daily trend line, and you trade a daily break, then this false break would not be traded on the daily, which is good. But on the 4-hour, the more aggressive way, it could be a trade, and you get caught in a false break, and boom, you see the reversal. That's why I say daily is conservative, daily with 4 is aggressive, and to guard against the false break, a tight trail stop loss is sometimes is useful tactic to combat that. Hope that makes sense. So in this case with the pound, I would only consider 1 hour, and 1 hour we see the trend line is when looking at the candles, we only see about, what is it, about 15-20% right above the trend line, not more, maybe even less. So definitely not a break there. This was a break. But yeah, at the moment, I'm not sure. I mean, we could put a fib on it because this was a break, but then again, we're slamming into resistance here. So now the trend line breaks. For instance, here on the hourly chart, let's take a look at this break perhaps. This is an hourly trend line, right? Because we see it on the hour chart. And you can see on a 30-minute chart that this is the trend, this is the candle break. Yes, I do use pivot points, they're not on this template. And I'm using this template because we're focusing on trend lines. But it is something that I occasionally look at to see where are the intraday support and resistance levels. Depends also more for trading intraday than swing trades. So let's see, how could we go long? Get a break, then wait for retracement below trend line. Let's see, a break, bearish break indeed. I would want to see price push through it and wait for a pullback. Same here. The alternative could be to let this 4-hour candle post and just look for a retracement of the 4-hour candle to the 38.2 fib, for instance. Something like that here. Fib this bearish candle and look for a short still at the 50. Tight stop loss here above this this high. Could be a very tight stop loss with a decent potential, or even if it does break, who knows, then even a lot more. Obviously, if it then breaks through this top, then the potential is to the upside. I would personally look for a 4-hour candle that is closing above this or has a decent size pushing through here, and then look for preferably a small retracement of that candle. The stop loss could be below the candle low if it's a decent sized candle. So that's a decent candle, could be the long right there, or a small retracement and then the long. Alternatively, a short if it hooks back for more downside like that. For the moment, I think that could be probably a bit more likely. Considering this fall, we're right now in a momentum. This momentum will fade away eventually. And then it depends how it will respond to these levels. Will it bounce aggressively like this and then make a bear flag? The bullish break then seems more likely. If price starts to move up slow and something like this, and this goes to the zero line, and then we see a break of this support trend line, one more downside seems more likely. At this moment, It really depends how price reacts to these levels, aggressive or flat, whether we get more upside or more downside. That's why personally I would not want to put a pending order, in this case, on a short. Because let's say I trade the 50 fib here to the downside. And this starts flying up and then starts to make a bell flag. Well, then probably my short is stuck in quicksand. Because I'm hoping for price to go lower, but know that that probability is low. So I can either exit for half a loss or keep it and hope for the best. But both scenarios are not that great. That's why I'm not a big fan of a pending order short, but I would not mind a short though if there's a flag. Now at this moment, because of the big fall, it almost seems a pity not to trade it. But once again, this pound dollar has already fallen 90 pips at the moment from the very top. So typically, I don't see much potential. I mean, on average, if you look at pound dollar movements, then typically, you're not going to see this fly down another 200 pips on a random Tuesday. So the potential to the downside is limited in that regard, I think, despite the momentum here. If someone took the break, the counter trend break somewhere in here, then I would personally even be looking for taking profit. Taking profit, probably, let's see, probably right. I would probably even think right here actually, and just book those 55, 60 pips. Because 152.75 is a level to that could bounce. I think it's a decent chance. I think we have some support here in a 61.8 fib. So I would personally think about that. But obviously that is up to anyone who is in that trade. That's just my idea. Your dollar is starting a bit later, but did get some bit more follow through the last few minutes. I personally would not go long because it's too much momentum to the downside. That would be, I think, not. I mean, personally, I wouldn't be a big fan. I know that traders do like to trade fibs like that. It's certainly possible at times, but I don't think that this is maybe the best place to do it. Because we're still in a triangle, we're halfway that triangle, so that fib might not be that very important. It's just, for me, a potential target if you are in the short, that's all. Because of more factors as well. The zone here and the fact that it has moved so much already early this morning. The momentum to the downside will be over when, for instance, we get 1, 2, 3 candles up, 2 candles down, and then this third, like a 6th candle up like this. Wei is also adding that an S1 is close by. When you get a couple of candles like that, 5 to 6 as I always use, then that downside momentum is over. And then it could be building a base for something, for perhaps that rally, as I said, or that flag as well. One of the two. I'll have to keep an eye on that. For the moment, as long as these candles keep pushing, this is momentum, and momentum, in my humble opinion, can always push further than support and resistance anticipates. So from that point of view, if you have more patience with the trade, you can even just keep the short and wait for those moments to happen that you get 5 to 6 candles against you. But personally, I myself think that this is still just a very good zone to take profit, but not to trade to the upside. Mudras thinks, for instance, 78.6, 152.50. Still some, that's a psychological quarter level, 152.50, and the 78.6 fib. So let's take a look at some other pairs. Let's see. Dollar CAD was mentioned, I think, by Wei, if I remember correctly. So we'll take a look at that. I basically use any time frame for determining whether the momentum is over. Doesn't really matter for me. For me, it's all about making higher highs and higher lows within 5 to 6 candles. On a 5-minute chart, 5 to 6 is about 30 minutes. That means 30 minutes. We need a new low or high. Otherwise, that is the phase of momentum. Otherwise, the market is just correcting or bouncing. But that rule is not only applicable, in my opinion, to the 5-minute chart, although I think it's a long time ago, but I think it originates from the 5-minute chart. But I noticed that after a while, I looked at other charts and I saw the same thing. So I think it's just applicable, and I use it myself on all time frames. Alrighty, let's take a look at dollar yen. Dollar yen is at a potential bouncing spot, not based on this fib. Broke that one already, but still above this support line here. Hooking back perhaps to this resistance line, broken resistance line. Could be a level to look at, but the thing is that dollar yen is showing some divergence on the 4-hour chart. So we connect these tops like this, you can see that this is getting a bit corrective and we get divergence. So from that point of view, less desirable at the moment, especially if you consider the dollar indecision at this moment, probably. The ups and downs it's making this week. So let's see if there's something better. I'd USD perhaps. And dollar CAD. Let's start with dollar CAD. Caitlin, by the way, I forgot to answer your question there. Regarding strategy, please send me an email. That will make it easier for me to explain the details. There, I sent you the email address, and Wei said on the dollar CAD double bottom. Let's see, double bottom on the hourly. Yeah, it's indeed. Yeah, it looks like a range at the moment. Yep, I agree with you. Right at the bottom, making this break. So it looks like dollar CAD. Maybe dollar CAD could be even a better one than euro dollar and pound dollar. I personally like this one the most. I would wait for a pullback. Let this go to the 0 line. Looks like a falling wedge that's broken at support. I would look for a move to the 0 line, put a trend line on the tops here on the 5-minute chart and the break. Alrighty, let me take. I'll take a look at the cable and again in just a second. Let me finish some other currency pairs. Does anyone have a preference? Let me take a look at the strong and weak indicator to see if there's any particular combination that could be good to look at. Let's check that out. Here it is. It's always good to reapply this particular indicator. I've noticed. Dollar strength, Aussie weakness. Yeah, the Aussie USD was on my list indeed. Let's take a look, and then New Zealand second, pound third, euro fourth. The other strong one is yen. So pound yen, perhaps odd yen or euro yen. Take a look at those as well. So first of all, odd USD. Yeah, nothing really changed a lot. I wasn't a big fan of trading this break because of the support, the break to the downside because of support close by yesterday in the video analysis. Still, same situation actually. Here's a trend line 2, a counter trend line, and I think it's the same thing like the pound and euro at the moment. It is breaking. It looks like a good momentum. Why not wait for a pullback and a continuation? I think that doesn't make the most sense, especially on this audio. Just like the dollar CAD could even be better because of the fact that this is a pretty strong 4-hour candle. The candle high could be used, sorry, and a fib on this halfway with a stop loss above would be something about 30 pips, not too much risk. Yeah, we're kind of seeing a pattern here. Definitely the USD dominating. So looks like the job is to find the best or the weakest to combine it with, and the Aussie seems to be a good candidate. CAD actually is in the middle. Aussie looks better than CAD now at the moment. Odd USD could be the best short. New Zealand is showing a second best potential. Let's take a look. All right, there we go. Well, I don't see anything better. I think the Aussie actually looks, from my point of view, Aussie looks a bit better. Just because it broke a trend line already. Aussie, according to that indicator, is also the weakest. So I think that still looks like my favorite at the moment. But let me take one more look at that indicator and look at the higher time frame now. An hourly chart, funny enough, dollar actually bottoming out a bit here. That's showing actually 50-minute chart too, 30-minute chart, excuse me, dollar actually have an upside angle, but quite low is the lowest. So that's kind of almost a contradictory kind of vibe at the moment. The dollar gaining strength on the 5, but very weak actually on higher time frames at the moment, on the 1 hour and 30. So it's a bit contradictory. I think it still boils down to the fact how will price react here. Will we get a strong upside like that, or probably at the moment the more likely bear flag a continuation. If we do get dollar strength today, probably the Aussie is the best. If we get dollar weakness today, then AUD-USD is the worst, and probably a euro dollar or pound dollar has more potential. All right, pound yen and euro yen. Let's take a look at those. Those have good trend lines too. Depending, this is one case where you can actually draw various trend lines, and this looks like a very strong candle pushing through that trend line. So this particular trend line, this particular break could be an interesting break to the downside for multiple reasons. Hang on, let me refresh this template. That's the support line. Price is still pretty far from that. You got a lot of trend lines here, potentially. That is one of the risks of trading downside. But you do have a lot of divergence, multiple ones, on a 4-hour chart. All right, going down to the hourly chart. You can kind of see a rising wedge pattern here. And you can clearly see this trying to break. Now, this particular trend line, let's talk about that one. How strong is it? We do have 3 touches. So what could happen is perhaps what personally I don't like about, if you look at the 1-hour chart, you can clearly see that this is breaking more recent trend lines, which probably has more importance on the current market. Now, therefore, I think that this break could be still interesting. What I would like to see is a retracement of that 1-hour candle. That could be a good short. Let me put fibs on this particular swing high, swing low. If it reaches 190, I might need to move the fib up actually, and fib this from here to the bottom. But anyhow, if you use a tighter one, it could be a bit riskier. It could be better to use the entire swing high, swing low. But this does look like a good break to me. If you look at the 4-hour candle, maybe even the best plan, I think, if you think about it, could be just to let this 4-hour candle close strongly with the bearish close near the low, and the size like this with a break through the 4-hour fractal, I think is a good break. A fib on that 4-hour candle, a hook back, in my opinion, even a pending order at the 50 fib with a stop loss above it, about 50 pip stop loss, targeting minus 618 target, I think. Let's check that out. For about 100 pip potential, about 2-to-1 reward. I think that's a good trade. If this 4-hour candle does something good like this. Looks like a good potential here. After which this target could be perhaps a bouncing spot. The minus 272 target actually should also be considered as a target, actually, because it is a 190 level plus a minus 272 target. So wouldn't want to underestimate that. Perhaps that could be the conservative target, the minus 272. The minus 61.8 at 189.70 could be the second, could be a bouncing spot as well, by the way, because of the target and a trend line. All right, so that's one idea I think I will keep an eye on. Euro yen. Looks a lot different. Didn't break any support. It's testing the top, if anything. Could still be at a resistance spot because it's at the top. Right here. So it could retrace, but looking at this formation, it still has important support levels below it, which I think definitely limits the potential here of the downside. So Euro yen Euro yen downside does not look as interesting. Does anyone have, yeah, New Zealand is playing dead indeed at the moment. Does anyone else have particular currency pair in mind? Oh yeah, AJN. Yeah, that could be falling too a lot, and it is. Yeah, I see your point. It is. Still above daily support, definitely. So from that point of view, well, if I would be looking for a long, I think 95 makes sense probably. Because you got this bottom still, you have a target. Excuse me, a stop loss of 50 pips, but a potential it could bounce easily up to the 78.6 of 160 versus a 50. So that's a good reward to risk potential there. I see your point. Trendline point of view, there's this. That's an important resistance line. That's about it. Perhaps this. I don't know. Maybe. Something like that. Yeah, I see your point. I think that it makes sense. It's a psychological level. There are definitely things to anticipate some reaction to that level. Plus, there's a good reward to risk. So from that point of view, it makes sense. So the yen, let's see, yen strength could be limited. If we look at the odd yen, if it does bounce at 95, the yen strength will have to be limited. But of course, you never know. This could take long before it turns. There could be a couple of 4-hour candles just going sideways, and then suddenly it goes up. So the pound yen, if any yen strength trade is taken, it probably only pound yen is at the moment the best option. USD seems to be the best downside trade, and the best upside trade probably EU-GU. This is the New Zealand yen. I have to get a bit of idea what's going on. Didn't look at this pair at the recent week. Let's see. Seems to be a pretty tight range. If I look at, that's true. Well, those pound pairs are a bit rangy, especially the pound dollar. So perhaps even the euro dollar could be better. Let me take a look at the euro pound actually to see that. But if I look at the New Zealand yen, I'm not I think taking profit personally wouldn't hurt here. Let me ask the others here with us today. What do you think? I mean, to me, if anything, it seems more to be a bouncing spot than a whole lot of follow through to be expected at this point. Moved up from the very top to the bottom. Looks like a channel, looks like at the bottom of a channel. One way it could be maybe to trail stop these hourly candles. You can see this is momentum. So if you still want to hang in there, try to catch more, then perhaps you can use that trail stop. But to me, I think it doesn't look bad, like locking in the profit. Okay, you have to live with the fact, of course, that if it continues for whatever it does continue, then what can we do? That's just part of the game of trading, but and we have to accept that. But I don't think, I mean, it could suddenly break more and go and dash down to this S2 and fall another 25 pips. What can you do? But there's also a chance it could do this. So if it's good profit, why not? But the alternative would be, if it's a good R2 and doesn't clash with your trading plan, obviously, then why not? Alternative would be a trail stop. We can take a look at, good idea, let's take a look. RSI is getting, in my opinion, close. It's not there quite yet, 28. Bullish 15-minute candle. Looks like we're building a base here. If you look at the 1-minute chart, you can see already this is turned up. So I'm just going to the 1-minute chart because Björn was talking about the 1-minute chart. But yeah, I mean, I think both answers are equally valid. Depends which one you like the most. Let's see. New Zealand is tight, Modris is saying. That's why he looks at the odd yen average. Okay. And anything else? Fractal break. Yeah. One way could be trail stopping this fractal indeed. Alrighty. Let me now take a look at the euro pound. Euro is really pushing a lot. So euro strength could be indeed the best. Euro dollar up, probably the better one. Odd USD down. I mean, let me say it this way, dollar strength against the Aussie or dollar weakness against the euro seems the best. Other option would be pound yen down or odd yen up, apparently, if I summarize my own thoughts. But all in all, if I look at today, it's not like I'm jumping for joy, unfortunately. I thought last week's setups were looking a bit more interesting. It's, I think, relatively, dollar seems to be confused. So, maybe some caution is needed. I don't know. It doesn't seem that appealing to me, all of these ideas, but those are some ideas that I'll keep an eye on. One more thing I wanted to say, and I forgot it. Yeah, the reaction to the fall, I think, will be important. When it does fall, how does it react? Does it do this, as I said, I already talked about it, or does it do more like this? I think more information the next few hours will probably, hopefully, help a bit to solve some of the things that I'm still not sure about at this moment. Other than that, anything else that we might be worth taking a look at? Let me quickly scan some charts. Euro odd seems to be pushing nicely. Could even be better than the euro dollar. Let's put Camarilla on. Oh. Let's see. $147.50 level at the moment. That is psychological round level. Could still push a bit through. I think waiting for a bit of retracement. These bottoms could be the stop loss bottom here, 146.90, and a long maybe at the 61.8, the 50, 78.6 could make sense on the euro odd. Let's see. That would be still a continuation setup basically. Momentum is up. Look at this moving averages and this one. So we'll be trying to catch a part of that, only a part of that. So definitely personally would aim for a tight TP because we don't know how far it can still ride. It has pushed up already a bit. Using trend lines, we would have something like this or this. So a hook back for more upside, I think, looks interesting. Definitely an uptrend here on the 4-hour chart. Breaking above this top. target perhaps 147.75, 148 for today. Very max, I would say. Yeah, euro looks actually maybe ironically the last one we look at, but maybe even the most interesting one. Good trend. Let me get rid of all these moving averages, 1 second. Weekly impulse after breaking these trend lines. This trend line in this rising wedge. Definitely have to be careful of the 148 though. That is a minus 68, 146, 170, 147, 70 here. This is a minus 618 target, so could see respect of the market. So from that point of view, definitely tight stop. I mean tight TP. All right, folks, that's my thoughts for today. Let's see how it ends up, and we can talk about it tomorrow again. Tomorrow we can look at that during the webinar with Forex strategy, and we'll take a look at range bars again, try to focus on that a bit more, and try to take a few setups. Hopefully we can catch them. They're set up. Tomorrow night, let's see, we got pivot points, new approach in pivot point trading. Oh, that's good for Caitlin. Caitlin, you got a great webinar tomorrow, pivot points. Nana is talking about that tomorrow. And Thursday, trading decisions based on naked charts. So I hope to see you in tomorrow's webinar and the others this week. Yeah, great. That's perfect timing for you, Caitlin. Regarding, oh, sorry, Jen, yeah, cable. Let's see, cable, you can load long cable with the break of the trend line. Yes, 1 hour candle is okay. I probably personally would rather have the 4 hour candle in this case. But 1 hour is possible. Here on the 5-minute chart now, by the way, this is the 5th candle, so perhaps the momentum is over. We'll know, I guess, a couple of minutes from now that potential is there, and a bounce could happen. But how will it bounce? Bear flag or impulse? Let's see. But 1 hour is possible. I might have the preference for 4, but it also depends on how it pushes. If it really pushes fast like this, 1 hour could definitely also have its advantages. So I'll probably rather wait to see how it reacts here. If it pushes up, down, then I guess anyhow it will be tomorrow morning again, and it will be a discussion about whether there's a bounce here, or for instance, if it does this today and then up again during the night, then whether tomorrow we have a break, for instance. I guess those would be perhaps things we could look at tomorrow, depending on how today goes. All right, folks, thanks so much, and see you soon. Cheers.